Howdy, howdy. Time to get rowdy. How we doing, guys? I hope everyone's well. How we all doing? Okie. So let's start things off with recapping what we had yesterday. So we took a loss yesterday on Euro right here. We had a partial run where it came down close to the first target, didn't quite hit it. We then had consolidation, price chopped around until it started expanding higher again. Completely fine. Like I said before, in terms of probability, every trade cannot win. Simple as that. So remember that it's not a case of every time you enter you got to win, because that's the mindset of a gambler. That's always going to end you on the wrong side of things. Now, today, you can see that we have the high area and we have some liquid lows right here. So we have an equally small area to sell from as we have to sell to. So there's nothing crazy going on in terms of a setup scenario for this. Let me just turn my pen on one sec, see? One seckie. We'll have this on. Doing well. Amazing. I'm glad you're good, my friend. Yeah, doing good. Thanks, buddy. So again, we're looking for price action from here to sell down to the lows, if it delivers up to these high points. You can see though, notice how we're predominantly bearish. There's no gaps being created to the upside in here. It's all tightly knit candles. I'm glad you're doing well, my friends. Missed an absolute corker entry on gold this morning. Absolute shambles. You guys know that we've been calling these longs all week. Even though we haven't really gone up, we've been calling longs. We've had entry areas which actually looked like this. You know what? Let me show you guys a picture from this. Here. So that's what it looked like before. We had the areas we were looking for entry, so including this low. Because we had a possible buy from here, and we were looking for these two targets and these targets to be hit. Price taps into this area, hits both of these targets, and then it decides to sell lower. Now that leaves us where we are right now, where prices come down and hit this point, and now we're looking to trade it back into the new targets that are formed, and I'll show you those in a second. So let's just delete this. This was posted to the VIPs. You know what? I'll go to the hourly. There you go. It's easier to see now, right? So from here, we swept out the low, and we're now looking for it to run up into this target high. Ultimately this, and this as well. So in our case, had a bit of an annoying entry scenario, because on the 15-minute, it opened up beautifully. So it came down, took the low, and again took the low. We open up a gap right here. Price doesn't tag in to the candle. Okay, so if you use the 15-minute for the entry, you wouldn't have got triggered in, unless you're using zero spread, which is pretty much unheard of on gold. So the 15-minute didn't trigger in. And then the 5-minute, now I did have a couple of people raise the point that there is a gap here, and that we swept out this, and there was a gap there. On my broker, there is no gap, and on some of the other brokers, so this is FX, on some of the other brokers, there is also not a gap. So unless you have consistency across the board for a gap, and obviously you want a relatively large gap, this is a tiny one, you best to avoid the entry. So I was trying to get involved with this big old gap that formed. Trying to get involved here, stop below the low. Price literally came down. I thought, great, we're going to trigger in, and then off it went. Now, there are, of course, different variations you can use in terms of trading off of these points of interest. One of them being waiting for a higher time frame gap to form, so 15-minute, for example. When this gap's formed, you then use that gap confirmation for upside as a confirmation to look for smaller moves within here, right? So you would use the same principle. You would use bearish, and then you look for either an inversion of that or a new space to form for upside movement. So if you were using that principle, you would have confirmed your entry. You would have been looking for a pullback move to occur, and the inversion move happened here. So it would have been there for your entry, here for your stop. I wasn't, though. And notice something as well. I could have easily opened up the stream, and said to you guys, oh yeah, traded this, so clean, 1 to, whatever, I don't even know what that is, 1 to 15, or I could easily have just said, I'm already out, 1 to 8, great day, hope everyone's good, and then just talk shit for half an hour. But I didn't, because that's not the model I used here. I used the 5-minute sweep of the low that we marked and gave out to everybody in yesterday's live stream, and the entry didn't trigger me. That's fine. Yes, we took a loss yesterday. So what? Notice how the behavior cannot change. If the behavior changes based off of a previous day results, inconsistency will occur for the rest of your trading career. Simple as that. Now, we're looking for this target and this target to be hit. There are smaller targets within here, the lows, the highs within here that we have hit, and you would be more interested in those if you actually secured a position to go higher, which I know if anybody that follows this system that's in the live stream or the Discord community, they would have already factored those points in. Within here, the points you would have been looking at would have been this, as it's the highest point of the collective highs right here. This as the first target. And then maybe this if you're looking at tighter targets, but gives you 1, 2, and 3, so you could have easily partialed through those if you wanted to. But the same principle applies. We just wait for this target to be hit now. Okay, we can pull this in, and we can reduce this down. Notice how the entry area is getting smaller and smaller. Now we could extend this and say, oh, use this as an entry, and this is an entry, and this is an entry. But that's not very realistic. We want to be within a realistic boundary of what price action is actually willing to do. Now we can have unlimited targets high because there is unlimited probability for a push higher. There is not unlimited probability for a pullback. Simple as that. So let's go back over to Euro and GU and see what we have to look at here. Oh, so I'm just going to mark up some smaller time frame stuff in here. Get rid of this on the hours. We don't need to see that. Okay. So first thing we want to be doing is looking at where the high areas of liquidity sit so we can have something to target. Now those points are here, here, and here. Relatively spread out. Then we of course have the low and the one right down at the base. Now why do we have these areas? Well, the reason we have these areas is because they're responsible for taking out previous candle structural points within here. Well, this one isn't, but this is. So there was a low right there that caused the new high to be placed. That was taken out. Price moved higher after it. Exactly the same as this. This has taken out this low, which caused the new high to be placed. So we're seeing a pretty consistent move like this. Yeah, meaning that the liquid sits here. And that is what these represent. This is a singular candle basis. If we go down to a lower time frame, which we will do here in a second, go like 5 minute. Notice how you begin to see this pattern here, where you have price moving up, getting swept, and then running. Yeah, so we have that marked up. Question. I find it hard for myself to switch bias as I picked up a lot of bad habits from trading model. What gets to switch your bias intraday? I base my bias for, let's say, this is the beauty of it as well. Be flexible, be completely flexible. Whether you have a incorrect bias for 2 days or whether you have a correct bias for a month, be flexible with it. Just know that when your bias is incorrect, excuse me, the chances of there being entries delivered is a lot less probable, right? So this is a simple method that I use. Question. What causes an inefficiency in the market? What causes an inconsistency between one-to-one buying, one-to-one selling? Well, it's the big banks, right? It's the big banks. Who do we want to trade with? Big banks. So look on the higher time frame, whatever your higher time frame may be. I mean, do you have 3 time frames? So do you have your like bias time frame, then your confirmation time frame, then your entry time frame? So for me, for example, it's daily, then like the hourly, and then the 15 to 5 minute for entry. If you have those, let me know and I'll use your time frames in this example and help. Hopefully that will help you understand more. And it doesn't matter what they are. There is no right or wrong in trading. So just whatever your time frames may be. If you have 3 preferable time frames, let me know and I'll use them as principle. Once you posted those, I'll go for it. Okay, let's just get this out of the way here. Get rid of that. 30 minute, 15 minute, 1 minute. Perfect. That's great. So we're using, and you know what? I'm just going to go to, let's go GJ. Okay. I'm going to go to blank charts here. GJ. And we're going to remove all drawings because it's literally irrelevant for us. We'll go to 30 minute. Okay. So all I'm doing, we'll start here, let's say. Okay. As I can read price well and I can understand the fractal nature of price. Yeah, that's great. So 30 minute, so from here, for example. So let's start from this point here. Okay. So all I'm doing right now, if I'm using a 30 minute time frame as my higher time frame bias, I'm looking at the most recent gap and I'm telling myself, what is it that price action is looking to do right now? Well, we can see that we're sitting within a higher time frame gap, so there's obviously more buying pressure than there is selling, but currently price action is going down. So you use this gap and you say, my bias is bearish. Awesome. Then what we're going to do is we're going to look on this time frame as well, and we're going to say to ourselves, where is price likely to go? Well, it only has one target if we go down on this time frame. Oh, excuse me. Get off me, man. There we go, right. Here, we only have one target, which is here. Okay. So we set that as a target. And then we can come down to the 15 minute. You said next, right? Yeah, 15 minute. And then we'll say, what direction is price action traveling in here? Okay, again, it's bearish currently. Bearish, right? Awesome. Do we have any other targets? No, we don't. So it's looking very bleak for targets. But what can we look for in terms of entry? Well, we want to sell down to this target, right? Our bias is for price to come down to this target. Ideally, we'd want to have multiple targets to hit, because you could just hit one and then change, right? But in this case, there isn't. So our target is here. So we want to trade price down to that low. Where do we want to trade from? So I'm looking at this as a high, I'm looking at this, and I'm looking at this, right? So it gives us 3 different areas to look at to sell down to. Or sell from, sorry. Not sell down to. Now, same principle applies using the 1 minute. Will it let me go down to the 1 minute? I don't know. Let's just use 15 minute here. Okay, we sweep. Is there any gap created? No. Is there a gap created? No. Okay, so that becomes completely invalid to enter. Remember, our bias is given to us by our 30 minute. So, do we have a bearish gap still? Where is price? Oh, there we go. Do we have a bearish gap now? No, we have bullish. So our bias now has changed. So that's fine. We now start to use the same principle, and we say, this is a target. Now, the one thing I will say is when you're using a lower time frame like 30 minute, you are going to change your bias more, but it's not always going to be the case. So now we have that as a target. We have this as somewhere to trade from. This is somewhere to trade from as well. And we can come down to the 15 minute and use the same thing. Okay. Are we bullish? Yes, we are. Do we have targets? Yes, we do. So our bias now is for these highs to be taken. Ideally, we want to see a pullback. Okay, do we get both of these targets hit? Yes, we do. That's fine. Is the 30 minutes still the same? Yes, it is. Great. Go back to the 15 minute. Ideally, you'd probably want to have a larger gap between your confirmation and your sort of entry levels, if you were, but it's exactly the same, right? So we look for the same thing. Also, keep in mind, let's just rewind. Rewind. Back to here. Now, you guys see I haven't gone down to the 1 minute. I haven't been down here. I don't know. But you can use the same principle. 15 minute is bullish. You can go down to the 1 minute if it's in your time frame. You can begin to highlight points within here that hold value for you. So you can say to yourself, okay, well, here we don't actually sweep out there. That we don't really sweep out. That's relatively strong low. And here. And this. So we can look at it in the same principle, right? We know that the 30 minute is bullish. We confirmed this. We know the 15 minute is bullish simply by identifying the gap, right? If we see bearish gaps opening up within here, if we interact with one of these and create a bullish gap, that gives us pretty strong confluences that price action is going to go bullish. So you can look at lows within this area to see if price action is going to deliver the way we expect it to. Does it get down into those lows? No. But look at the principle here that I just showed you. Notice how it goes. I wouldn't even call that bearish gap. Bearish, bearish. Okay. Then we create a bullish gap. From this point, price action actually comes in and goes bullish. So the first bullish gap created, it goes bullish from. Now, for me, what I'm showing you across the higher time frames is using lows as relevance for liquidity transfer. So if you sweep, then you go long, right? But you don't have to use that. You can use points of interest, or you can use order blocks. You can use whatever you like. But notice how simply having the bias on the 30 minute allows us to pick up a bias straight off the bat. Bosh. We do not change our bias now until we see this 30 minute gap change, okay? So let's just play this at 3 times and see how long we would be correct for. Actually, I want to look at that. I want to look at that now. That just dropped down heavy. Let's see this. And look at this, right? So let's see the same principle applied. We would have had this low marked and these lows. Okay? Look at the way price comes in. Takes out these lows, all 3 of them. We do not make a gap until here. And price just takes off from that point. Yes, there's a gap opens up here, but it doesn't interact with anything. Yes, there's a gap opened up here, it doesn't interact with anything. It's the relevance of that gap opening up. It's the relevance of the nature of the market at the present time. So I'm not trying to show you an entry here, but basis is the same thing, right? 30-minute. Let's play it. We'll see when we change our bias. So we changed our bias right there. Let's rewind. We change our bias there. Now we're looking for shorts within here. We go to the 15-minute or the 1 minute. There's not really much going on. It looks pretty bleak. You can look here and here, but it's very, very bleak. We have this as a target and this as a target. Price takes our target out, which isn't ideal. So look at the way we pull in. No gap changing. We pull in again. No gap changing. We taken the high. So at this point, we're literally like, we're seeing price action move, and it's actually changed again. See, this is the principle that I was saying before. If you're using the 30-minute, that's fine, but we need to make sure these gaps stay in the directional bias that we have. If we come down, let's say it takes a low, then our bias changes. We'll miss an opportunity to go long to hit the higher time frame targets than we would if we were just trading it on one time frame. So same thing applies when you see these gaps form and you play it, and you'll see the way that from here, if you look at that, bullish, 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 bullish. Okay, right. Bias changed, right? Let's see down on the 15. Is there anything for us to follow? There's a low here, so not really much going on. 5 minute. Same principle. There's only one low here. 1 minute. We could look at... we would have looked at that at first, actually. Let me just double check that. I don't want to... 30-minute. Yeah, so our bias is bearish right now. You will go down to the 1 minute, right? Look at your points of relevance. In this case, take out the low. So you'd have a point of relevance here. If you come and interact with this and you see price come up, create a space, you can sell that down. Because you're using it the 1 minute time frame, there's going to be a lot more mush in between the points of relevance. We can see this is a point of relevance because it sweeps previous highs. And let's just push it forwards. Again, I don't know if it actually gives an entry. I just saw it sweeping it. So you would have looked to enter like here if you're looking for the pullback and run rather than just entering at the gap. Okay, so it doesn't tap in. But you see the basis, the same principle occurs. We see bullish gap, bullish gap, bullish gap, bullish gap, bearish gap, small bullish gap, bearish gap, small bullish gap, bearish, bearish, bearish. So it's all based off the same thing. But you need to be willing to accept the fact that you could see changes in your bias time frame and just follow it. Like, look at that. We had one gap open up here on a 30-minute and price sunk. The same as we did before. So let's see if we can see when it changes to bullish. If it changes to bullish. It's still bearish. No bullish gaps have occurred. Okay, bullish gaps. So our bias now is for bullishness. We expect price to travel higher. All right. We might be wrong. We are. So be it. Let's see. Certainly traveled higher in here, right? Bearish gaps, so now we'd expect price to run bearish and take out these lows. There it goes. Beautiful. Let's do the same thing. Bullish, so now we expect it to take out this high. There it goes. Like clockwork. Just run it again and see where it goes bearish. If it goes bearish. Doesn't. It goes bullish. And then you'd see the same thing. How you begin to bleed these into this, and this into this, and this into, let's say, like the 4-hour time frame. And then you begin to really have a consistent across the board bias that you can change in a heartbeat with doing minimal analysis work. Literally minimal analysis work. Let's see if we can get the same thing to happen. So bearish. Ooh, so the low for this is way down here. So I would say that it's very unlikely for that to be ran. But come down to the 15. Is there anything on a smaller time frame? There is this low that you could aim for, but we'll see. Let's go back to the... Okay, so we were wrong. It went higher. Cool. But notice how within a split second we made decisions for our bias on a given time frame instantaneously without even having to do anything really. So that's the premise of what I would say is the way that you can define a bias relatively easily. So right here as well is the same thing. Notice how we developed this gap, price run down, took out the low. Cool. We've now developing a new gap, so we'd start looking for highs to be taken. If price comes up, takes a high, then it changes, we'd look for this low to be taken. And this low to be taken. If it gets down to here, continues bearish, you just keep aiming for lows, right? Till price wants to tell you it's going back against itself. And you could also just trade off of the basis that if you see a gap, you enter with your stop below the gap itself and you trade into like a 1 to 2R sort of thing. You're going to take losses, of course, but you're going to take losses with every system. You know, there is no 100% guaranteed. So using the basis that I just showed you, let's have a look at what we have here. So we have a target, point of interest that we could run down to, higher target, another higher target. Oh, that's definitely not right. Okay, so we have 3 targets and then the extreme high. Targets, beautiful. We can mark these as targets as well. Where's the box tool? Am I going crazy? Yeah. High targets. Okay. This hasn't technically formed yet, so we need to wait for this to form. But 30-minute. Come down to the 15. Is there any points of relevance here on the 15? Pretty similar to what we had on the 30, so there's nothing huge. So we can mark up these two here. Not targets, sorry. Entry zone. And then we can come down to the 1 minute and look at the same thing. Okay, do we have any points of relevance? We have this, but it's not really great. So if we're lucky enough to pull back, so let's say we form this gap and then we pull back and we hit the 1 minute and we switch, we can start aiming for this. Or we come down into here and the 1 minute we switch, we can start aiming for this. If we hit this first, then it's going to deliver a new target if it pulls back. So if it hits this and then it comes down, you'll have a new target here. Yeah, but it's going to be defined by the 15-minute gap. If it changes, your bias changes. Don't be scared to change your bias and be wrong. It's okay to have a bias and be incorrect. Also, like I showed you, if we look at the principle here, let's say that we were trying to go long here, right? So let's just rewind. So at this point, we have a bias of long. Let's go down to the 15-minute. We have one low to look at. 1 minute. Don't really have much going on the 1 minute, to be honest. here, and no, I'm not going to push the boat out on that one. So we go 15-minute again. So our targets, because we're bullish, our targets are up here. And then we'd have this as the target as well. Okay. So let's go back to the 30 minutes, see if we're lucky enough for this to tap into any of these areas. These are targets. These are entry zones. Are we lucky enough to get tapped in? Okay, so we hit the targets. The targets got hit. So we were correct in terms of where price was going to go, which was up to the targets. They got hit. That's great. Now they've come back down into our zones. Awesome. Is there a change of direction? There is a 1 minute shift here. In this case, you could look to long from here up into the highs, right? Using that as your first target and then up to the new target high right there. And we already know that this goes down. So there's probability you're going to get stopped out here. So we get a nice push. Prices, what's the time? 6:30. Okay, so let's be honest with ourselves. If we were in this trade, you're getting up to a 2.2 RR. You would be mitigating some risk off the table. Let's just say, for example, you didn't. You take a loss. Cool. Whatever. Come to the 30-minute time frame. We've now formed a bearish gap. So our bias, technically, at some stage within that trade, would have been inconsistent with the higher and lower time frames. Now that we have a bearish gap, we start looking for the points we had previously as points to go short from. Come down to the 15. There's nothing really on here. Let's just get rid of this. Come down to the... so we had this. Let's see. Remember, we're looking to go short here, but there isn't really any areas to look at. Also, look at that push, right? After running that liquid low, which we had highlighted, that push is crazy. But we got taken out. So the same thing works again, that it changes based off of what the 15 minutes telling us, right? And I believe the next time that we come 30 minute, not 15 minute, and we sell consistently across that movement. So it's all about the time frame you're following. So if it's the lower time frame, it's going to be a lot choppier. Look at that sell-off just from this. Yeah, where would our targets be if we're looking on the 30 minute? This low is the only low we have. 15 minute, we had a low here, but it was already hit. 1 minute. There was nothing you would have really been able to trade within here, but it would have hit your target. So your way to reference the order flow is gaps. Exactly. Because gaps are caused by big institutes. We want to trade with them. So if a gap is up, we know that the banks are up. So where are we? Up. You would be ludicrous to look at anything except for what is happening right now. And it took me a long time in trading to realize this myself. You think about the amount of time that you spend, not you personally, but people spend, okay, marking, let's say like this zone to go long from, or a zone here to go long from, a zone here to go long from, a zone here to go long from. When the whole time price action gave you a bearish gap and went bearish. Pulled up slightly bullish, gave you a bearish gap, went bearish. The whole time it's showing you in its current order flow state which direction it wants to travel in. So even on the 15 minute, apply the same rule. Okay? Let's say our higher time frame is bearish, like we said earlier. Bearish gap. Bearish, 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 bullish gap, cool, bearish gap, bearish, 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 travels bearish, so bullish gap, bearish. It just completely follows the same bias for so many candles it hurts. So many. That's why go over to gold. That's me 2 months ago when I was trading DTFX. Yeah, I mean, look, everyone has different ways of trading, but I've always said there's no way to consistently follow previous price action. Don't expect something that happened before to let price action affect. Sorry, what am I even saying? Don't let something that has previously happened, don't expect it to affect price action today that's already happened, right? Read what price action is doing today and then trade with it. Simple as that. Trade with it. What is this? What is this? I haven't taken any trades on GJ, so I don't know why that's there, but okay. An overnight position. Right, okay. You can vanish. I don't know. Last time I traded on GJ was ages ago. We've hit no points of relevance on here, so there's no trade to be taken. Let me go to, was it this chart? Yeah. So same principle here as what I was saying before. Took a short on gold from weekly opening gap. Where's gold? Nice. Nice, nice, nice. Where's the... Worked beautifully. My target is daily open gap. Nice. So let's go back to here 1 second. So I'm using your time frames here, so it's just gonna put a marker here. See if we get down to there. Go to the 1 minute. Is there anything on the 1 minute? We've already looked. I don't think there is. We're just gonna let it pull through into these lows if it wants to. Awesome. Gold is melting right now. Ooh, baby, yeah, she is. Let's go back to liquid only. And look at the way the same thing is happening on Euro. Notice how we set these lower time frame targets. Well, that one isn't a target because it's not technically a low. But now we're running for those targets again. So if we use the 30-minute principle, in this case, if you were only using 30-minute, you would have been bullish from this point. You would have had bullish bias here, bullish bias, bullish bias. So you may have taken a possible long out of this, but you wouldn't be able to capitalize on this sell move right now. Let's just see what's down in the 15. So this is the last point you were bullish from. Everything else is bearish. So if you're using an order block, you would have been able to capitalize on that. But otherwise, you were bullish from down here. The reason I don't use the 30-minute is because the principle that it changes quite a lot, whereas I prefer to have a longer period of price action playing higher. I'm still bullish on gold. I still think we're going up to this high, but that's because I let my system dictate to me what price is going to do, not what I think it's going to do. And like I said before, anyone that's trading this based off of the system that I teach and the principles that we teach, you'd be marking these points as short-term targets. So you'd already be partialed out of this. I didn't get tagged in, for anyone that's wondering. Remember, guys, if you are enjoying the stream, hit us with a little like. We appreciate it. Oh, Nas also ran bullish from that entry area that we gave. I didn't trade it. There was nothing in there really for me to follow on from, but it does give a push higher from there. I'm not massive on the indices, to be honest with you. Prefer the Forex pairs. Lost from yesterday. Target 1, target 2. We have the targets down here as well. If we go to the higher time frame, you'll see them like so. Short term. And then we have a higher time frame target just down there as well. Same with GU. Targets, entry points. I would not be surprised if this rips off to the upside. Anyone that is shorting it, I hope that you get to your TPs though. I'm not trying to counter your wishes of price going down. My bias is just bullish. Remember, guys, if you do enjoy these live streams, share them with your friends. Hit the like button. Join the Discord down below if you're looking to make profits without doing anything. NetSab Investment is the place to go. They're currently offering a £1,000 minimum deposit for one of the investment schemes that they are running currently. If you do want to learn more about that, then you can, of course, contact me, or you can go direct to them using my name as your reference. The £1,000 deposit minimum is only available for clients that come from me, so you must reference me to be able to use that. NetSab Investment are based in Kuwait City. I recently visited them for 7 days. Everything paid for. All I did was visit the HQ and show my face. It was probably one of the best trips I've had in a long time. Feeding me up. Feeding me like a king. But I'm not being paid to advertise them. I'm advertising them because I work with them and I know their systems are trusted and they are well respected within the industry. So you can go ahead and check them out on your own will, or you can come to me and I will give you as much information as you need. Of course, if you are looking to actually deposit and make some money hands-free, then I will pass you to one of my associates in Kuwait and you can talk with them directly. So gold targets are high. Let's see where they go. Let's go back to the blanks chart because I did mark up couple of points here, didn't I, for okay, so taken and taken, so we can mark these up as targets taken. Or, oh, there we go. Comes a new target. So if we get a pullback now, we're going to get some entries up into those highs. So if any of you guys watching right now have any other full-time professions, connect with me via LinkedIn. Head over to LinkedIn, search Ross Hayes. You will find me on there. I will happily connect with you guys on a more professional basis. Okay, so we've got some alerts set on this. We'll come and look at this if it gets down there. Oof, look at Euro. Flying, baby. So gold pulling back substantially, but not making any new ground. Right, I'll be back in 2 minutes, guys. We back, baby. We back. Right, what's going on? No alerts so far. Gold starting to get ready to go ping. We'll see. We'll see. Excuse me. 1 second, guys. Got a phone call from my partner. Alright, so about that, guys. Partner, give me a little phone call. So, Euro's about to start reaching down into those targets. Gold's about to ping to the upside by the looks of things, but we can't really see if it's actually going yet. Huge amount going on. Just chill for a few and see what happens. In live an hour and 4. Not longer than that. Going on, Andre? Hope well. Lock up the oil. Let's do oil. So we mark up oil and see what we get. So straight off the bat, pretty obvious. Have you charted gold already? Yes, I have. We'll go back to gold in a minute. Right here, target high. This would be an entry low, but it's obviously ridiculously low. So let's go 4 hour. You have here and here. Also, if we go down to the 15-minute, we have pretty similar spots, to be honest. Base here, but I'd be looking here. First point. So target highs. Can of course expand that out, but target highs and expect price to keep going up if it wants to deliver to those highs. Notice how it's got what I was saying the other day, which is really extended areas of entry and really condensed areas of, can I highlight? Thank you. Targets, which generally is the opposite. You expect price to pull back down into the target areas before going higher. So not really the best here. You want to see something more along the lines of DJ. Gold. Oh, here's gold, by the way, Andre. So target highs really tight on the entry areas. So the entry is really small. This was included on the entry. That was the entry there. First target, second target, they've both been hit. Third target, and of course you can extend it all the way up to this high if you want to show the max potential for the trade. But that's an all-time high on gold, so it's like we won't get there in one swift move, I don't believe. That's what I'm looking at. So the entry there, for me, didn't tag me in, unfortunately. But like I said earlier, you know, I could have opened up the live stream and said, "Oh, we got tagged into this at 1 to 50. Look how amazing it is." No, we didn't. You took that one too? Nice. Nice. Yeah, I did put a shout in the VIP, so I assume that you saw that. Unfortunately, it's not running as high as we thought. It is starting to push back down a little bit. So be it. We still have a bias for long. So stopped out in the trailing stop. Yeah, from this big old push. Not too sad though, mate. Not too sad at all. So we did mark up this GJ right here. Made 242. Beautiful. Love it. We go to the hourly. Notice how, again, and we marked this up in real time for all of you that are in the live stream. We marked this up using the principles that I show you on a daily basis. We marked it for Akram because he was saying, how do you define the bias and how do you keep it consistent? And so we showed using the timeframes he uses, which are 30-minute, 15-minute, 1 minute. We showed you the exact principles behind everything that we were looking at. And you can see these are the 30-minute targets right here. And these are the entry points. So we have a tiny area for relevant entries and a large area for potential targets. That is the much more preferable way for price to be laid out for us. Because then we know if we push through here and we get no entry, then we can just let it do its thing. It may change our bias depending on what time frame you're using. 30-minute, you are going to see chops a lot more back and forth. But you also will see targets be hit more consistently. So it's half a dozen of one and 6 of the other. It's all the same, but it's also different. I just burnt my mouth on a coffee. See if we can get into this. Remember, if you are liking the stream, guys, then drop us a little thumbs up and a comment. Say hi if you are in the stream. If you're not already a YouTube subscriber, then hit that subscribe button. If you're not already a Discord member, then join the Discord with the link down below. Okay, Euro flying down into the targets now. So remember, we didn't necessarily have an entry for this, but that's fine. So we have gold potentially coming up again for the highs, but at the moment it's sitting around the mid of this range. So I'll be looking for like a lower time frame confirmation in here. So if you look at what we have here, let's go down to the 1 minute. Good, cool. Down to 1 minute here. So notice how we can use the same principle that I applied earlier. So from this point, we opened up a gap. After that gap was created, we have a relatively high push to the upside, or strong push, sorry, to the upside. We can now use the same point as relevance. So here, if we create a bullish gap after this sweep, please, there's again more probability that we could continue seeing price action head higher. Now, this is going to be unique to each time frame, because if you're using like the 15-minute as your confirmation, 5-minute as your area of interest, and then your 1 minute as entry, you would need to validate your bias through the 15. And at the moment, the 15 is still bullish. So bullish here, no gaps being created. Go down to the 5-minute, we are actually bearish. So you need to wait for a 5-minute gap to open up and then trade off of the 1 minute switch after that, because then you're marrying all three time frames together and there is no conflicting directional bias between the two. And remember, the bias is defined instantaneously. There is no how many dots and bops and, you know, time of day and day of the week and day of the year, day of the month. It's just a case of what direction is Institute traveling in? Is that aligning on all three of my time frames? If yes is the answer, you trade when price action changes into that directional bias. But in this case, you don't have it, right? What's going on, Ben Capital? How we doing? It's been a while. Yes, I've been super busy. I've been busy with my new job for Nisab Investment. See, they are proud sponsor of the stream. And it's not a spade, it's not a paid sponsorship, so they're not paying me to post their advertising on YouTube. I work for them and with them, and I've seen the validity in their algorithm and how well it works over a long period of time. So I'm happy to have them as the sponsor for the stream and the YouTube videos going forwards. Welcome, welcome, welcome. Hope you're good. So let's go to oil here. Oil's still fidgeting around at the moment. Hourly doesn't really show much. Thanks, appreciate it. I've also got a 4-month-old baby now, so life is busy. Life is busy. Cheers, guys. I appreciate it. I appreciate it. I'd like to think we've worked hard enough to be able to get a position with a bigger firm, right? I mean, they're really respected in the Middle East. It's really is a good expansion of a solid foundation that we've already built. So I appreciate it. Cheers, Ben. Cheers, Bjorn. Appreciate it. Good to see you here, Bjorn. So gold, we're just looking for this run now on gold. We've already taken out the targets for the, I don't know what that is. Oh, that was what I copied. And yeah, so I've been super busy with my new partnership with those guys. I've been super busy with being a dad again to a 4-month-old. He's amazing. He's just started rolling over and chitter-chattering and putting his arms up to you when you put your hands out to him and stuff like that. So super busy with that. As well as providing you guys with YouTube content. You know, YouTube content, trading myself, it's very full on. It's very full on. But we've been really going out the way when it comes to sort of spending time with my son, because I think they grow up so quick, right? What's going on, Michael? Hope you're well. Tell us more. What's the minimum, or is it an EA, or do you trade your funds? Do they trade your funds? So it's pretty much an investment firm that does all of the transactional side of the funds. So what happens is, let's say I decide that I'm going to put £10,000 into an account. It is my account. I can withdraw that money anytime I like. You're not contractually obliged. There's no fees to pay for it. They just take a cut of all of the profits that are generated through each month. So they have a minimum investment scheme on a 10% monthly return, which I believe is slightly higher risk. And then they have a 10% quarterly, which is a lower risk, but it's a higher minimum investment. And that's because it's more for longer term holdings. But they use an algorithm, and the algorithm trades your funds for you. They only time they ever intervene manually is to manage risk. But from what I've seen from their track records, it's not very much. I actually have, if you guys bear with me, I actually have a 10-year track record of the larger investment fund that I can pull up. So bear with me and I will get that for you guys. And it's 10 years on GU. Here it is right here. Oh, sorry, it's not GU, it's 14 Forex pairs. Here. Okay. So you can see. Oh, this is 14 pairs over 2020 to 2024. And you can see that the profit return was 486%. Average risk of around 2.7, so 2 to 3%, I would say, give or take. And this chart right here, this is a comparison of the S&P 500 and the NISAB algorithms. So you can see that the drop-offs are a lot less volatile. The volatility is just not there. The overall gain is a lot more consistent. It stays a lot more true to the principle of what an investment should do, which is gain steadily over time rather than having volatile drop-offs. They only trade Forex because the volatility is more consistent. This is a whole brochure, by the way, of 10 years back testing just on GU, 81% return. And during high volatility, so you think 10 years you've had COVID. You've also had a recession in, I believe there was a recession in the US, if I'm not mistaken. But yeah, there's lots of different things on here. Performance fees, again, this is for the larger investment rather than what I was saying to you. 8% monthly, but they try to return 10% quarterly is the target. So there is a lot of good points about them. Minimum deposit. So the minimum deposit for the larger long-term fund is 15,000 USD, so around £13,000. But that is because they're a big firm, so they don't really play with small fish, unfortunately. For the new investment scheme that they're starting next month, the minimum deposit is 1,000 USD. And the reason for that is because they are pretty open and honest. They spoke to me on the phone the other day when they said about the new one they're doing. Anything below 1,000 compromises the account, because if you pay commission basis on $1,000, or if you pay slippage or spread or whatever, like on $1,000, it's a lot more substantial than it is on like 15,000, for example. But the minimum deposit for the latest scheme that they're running is 1,000. but they did tell me they're only going to be running it for like 9 months. And then the idea is anyone that's decided to deposit with the smaller deposit, you would have made money on that, and ultimately you will be able to then change your account across from one to the other. Drop a link. Link is in the description down below, but I will drop a link anyway. But I think the best thing to do would be bear with me and I'll get you, if you can email me, so email me, that would be the best thing to do. Or message me on Discord. So I'll drop my email in here. Hopefully I don't get absolutely flooded with spam mail. So inquiries. If you want to check out the website is down below. But there's my email, stockrfx@outlook.com. If you'd like a copy of the brochure as well, feel free to message me and I'll send that over to you. It is a PDF file, so you'll need to do it through email or Discord or something like that. And they have Instagram and all that kind of stuff. You'll see me on their Instagram, so feel free to go and check them out. nesab.com. I show you a picture of their office or the foyer. Too large. Okay, cool. This is my office while I was there. Why is it so? My office while I was there. Really fancy, right? It's a really blurry picture. I'll try and get a better one. That's not a very good picture. Apologies. This is the reception desk where the receptionist sits, obviously. See, super plush. It's on the 8th floor of the Alhambra Tower in the middle of Kuwait City, and it's the largest tower in Kuwait City. So, not like it's not like some guy in a shed trading your funds for you. It's a proper investment firm. And if any of you guys are on LinkedIn, feel free to connect with me on LinkedIn, and you'll of course be able to follow them there and see some of the other employees, etc. I'm going to go back over to this blanks chart here because we're about to run the last target that we had. I'm going to pin this. So, is there any questions on what we're marking up at the moment? Also, guys, if you're not following me already, we're nearly 500 followers on the TradingView. I would love for you to follow me along, and then you'll see the weekly updates. Be great to So you guys give us a little follow along. That'd be amazing. Let me find another image for you. So this is the tower that their company works out of. Oh my lord. 8th floor. That's the tower right there. They're on the 8th floor. This is the hotel I stayed in, right next to the tower. So it was like a 30-second walk between. Yeah, really, really massive tower. It's literally the largest tower. It was pretty crazy, to be honest. It had the fastest lifts I've ever been in my life. The lifts were so quick that it actually makes your ears pop. Like your ears pop like you're going in a plane. It's wild. When you step into the lift, you can feel like a heavy draft where you've got other, lifts moving up and down so quickly. Okay, so we don't have any entry for this yet. If we get down into these lows, we can look to follow those. Yeah, it's pretty cool. Pretty cool. Let's just have a look at some random pairs here. Well, not random pairs, but let's have a look. So let's have a look at Bitcoin. I want to see where Bitcoin's at. Around the daily here. Clean. Cool. We've got the hourly. Okay, so I expect this to go up again soon. I'd expect this to go up again soon, but we'll see. We'll see. Not massively that bothered about Bitcoin, to be honest. Let's have a look at the S&P. The daily time frame. Bullish gap. 4 hour. Did we sweep out the low? No. Is that equal? Is that a triple? A triple bottom there? Eek. Rotten. That's rotten. A triple bottom. I've emailed you. Okay, Andre. Cool. All good, buddy. For anyone else that is in the chat, then please do reach out via email if you're interested in knowing more about our partners, SHub Investment. I'll be able to put you through to a representative that actually works in the office there. Of course, I'm relatively remote when it comes to working in the office. Okay, so what I'm looking at here is price action running down like this. And then we'll go long from there. What I'm looking at. Long the base from this. Let's see if that pulls through or not. Find out. Excuse me. Okay, so Euro tapped into this low area. Now it's starting to push up again. Now, we still have a bias short for this, and it's mainly down to the fact that we were bearish here, and we're showing little to no momentum to the upside. It's all downside. Notice the way that price action as well stopped dead at this low here. Now, do we believe that's because it's a really good area of support or resistance? Or do we believe it's encouraging people to lay their cash down in this area and let that area fill of liquidity, and then we'll hit somewhere further up and then dump through it again, giving us a closer and a longer term target fulfillment? That's a possibility. Doesn't mean it's guaranteed. That's what I'm looking at for euro. So the reason why kind of cautious with euro is because we're in a relatively fundamental range here, and I spoke about this on gold. And when we have a high generated by fundamental movement and we have a low generated by fundamental movement, these two will generally play tug of war between the buy side and sell side, causing one of these points to be a catalyst. Now, you'll normally see something like this: sweep, run, or sweep, run. It can happen either way, or you can have something along the lines of this, where it will just blast through the lows, right? And the liquidity will stay internal. A lot of the time, though, you'll find both sides of this range that has developed during that fundamental move will end up being cleared. Again, there is no 100% guarantee that it's going to be the case. But when we go back to gold and we reference the same thing, look at the way that we have the fundamental high, fundamental low. We've tapped into that low and price immediately is pushed back into the range. Now, whether it decides to push back and then go higher again, hitting a target and then drop off, whether it decides to just continue dropping, is going to be unique to the trading environment on the given day. Now, today, we had a trade that we wanted to get involved with. Didn't tag us in, so it's actually on the 5-minute time frame. Didn't tag us in, unfortunately. Price ran beautifully, so if we'd have got in here, we would have been able to close out partials at the 1 to 4.2 and 3.3. We have a higher time frame target of 6.5, but unfortunately we haven't got there yet. Now, I say unfortunately, but we didn't get in this trade anyway, so there is no unfortunately, it's just part of the way it moves. Now, using the same basis, if we had traded from here, partialing out at these points is fine, or moving your stop to a secured low. Now, there wasn't many consistently good lows within here. There's a couple, but the main low I'd be looking at is here, and then this low, which I believe has been taken out by that big drop. Yeah. So there's always going to be potential for price to reverse on you, even if you have a consistent basis of movement and a higher time frame bias. Now, we had a higher time frame bias to go long over here. Price came down, tagged in after a very long period of not actually validating. But initially, we wanted to trade this portion here, which is where we actually had the move that ran to the short-term and the long-term targets. Again, same principle. 4R is the maximum it went to, or you would have been 3.69 for your higher partial. Now, keeping in mind that we didn't get tagged into this, and we didn't get tagged into this, does that change the way we approach the market? No, it doesn't. It does not change. The markets always move in certain ways, and whether you take, let's say, 4 days of lossing, but 4 days of lossing, that's not even English, 4 days of losing, you still come to the 5th day with the same mindset, because there's always going to be a number, a numerical figure, that is the consecutive amount of losing trades you will take. Now, that is going to be dependent on your hit rate. Now, I will actually show you in a second when I get it on the screen. This. Oh. It is. Okay, so this losing streak calculator, okay, so this is right here. An easy way to humble yourself, okay, pretty damn quickly. Now, anything below a 50% hit rate, you will take over, and you can, sorry, take up to and over 10 losing trades in a row. Now, the reason why that shows that is because it's mathematically possible. Doesn't mean that it will occur, but it is most likely going to occur at some stage in your trading career. If you trade the same system consistently over a long period, this will occur. Now, this is based off of 1,000 trades. So the longest losing streak you would have been 10 trades. So if we start changing what we're doing after 5 losing trades, you're completely skewing this whole thing off, and the chances are you're going to put yourself in a ditch. Now, 30% hit rate, 19 losing trades. 19. How many people after maybe 15 trades or even 10 trades are getting ready to change their system? You know, it doesn't work, doesn't work, doesn't work. Look at it as the probability and the same principle as flipping a coin. If you land on heads 5 times, does that mean that the coin never lands on tails? No. So you have to keep the principle at the core of what you do. Whether you run partials for a week, whether you run losses for a week, or whether you take a full winning week, not going to change. Principles remain. Okay. Go back over to GJ. Oil. Look at oil now. Coming down in towards the areas that we were talking about. So if we come down, take these out. Is that a gap there? Like it. We come down, take this out. Start looking to follow it long back into the highs. Targeting the higher time frame principle that we showed you earlier. Now, a lot of the time, coming down to here may not give you that push. Coming down to here may not give you that push. But we're going to define a smaller time frame area within here. Keeping in mind, we're using the bias that's given to us on these time frames to define whether we're actually going to trade it or not. So when we get down to this point, if we're lucky enough to see a change in order flow and a shift in major orders going back bullish, there's a high probability you're going to see at least a run on the nearest point of liquidity rather than just price action go all the way through. Now, it's not guaranteed, but it is probability positive, if you were, in terms of what you're looking at on a large scale, because it aligns with all of the relevance that you have. So Euro actually pinged off of the first target, started pushing higher here. So let's mark that up. Target hit. Time frames aren't showing. Yeah, up here. 15 hourly. I can put a watermark on, but kind of looks ugly. How do I even do it? Okay. Gonna make it a little bit less predominant though, I think. Blocked out at the top? Really? shouldn't be. On my test stream, I can see it. Oh well, it doesn't matter. You guys can see that now anyway. Let's just make this a little. Let's put it down to like 5. Ah, there you go. You guys hopefully can still see that. Let's see. Yeah. Yes, the same principle. Looking for price action now to run to a point that gives us. Okay, cool. Yeah, it's no problem. I don't mind having the watermark if it makes things easier for people. So this put in a low that took out the previous. So it took out the high. This was the low that took out the high. This is also the low that formed before that high was taken. Both of these has been taken out. This holds relatively high levels of liquidity now. We can start looking at this as a potential for an entry zone, but keeping in mind that this is only going to be a short-term area of relevance. Reason for that is because you are range bound. Point and point up the top there. Gold is tanking. Let's have a look. Oh yeah, she is tanking. That's fine. Let's go over to. What's that? Let's go over to my FX books. Go to sentiment. Let's see what people are doing here. We actually have a 60% short bias on gold for retail. Oh my gosh. So what is our bias for euro? What has our bias been all week for euro? Our bias has been short. Short, 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 short. We only had a long bias. Where do we have a long bias? We had a long bias in here from this. Yeah. So we were long through here, through here, through here. Then we had a drop off and we've been short since then. The euro bias is 82% of retail traders are buying it right now. So the principle that I said to you guys earlier, where we've stopped right at the low on the higher time frame. We stopped right at the low. Is it stopping here because it's going to go long-term bullish? Or is it stopping here because it's encouraging everybody to put their stops under this low? Looking at the retail bias, it's doing the latter. So really, really important to keep in mind the longer term move within price action. Generally, the smaller fish are going to be swimming against that current. That's why we read what price action shows us immediately. And more times than not, you're going to actually see the result be more improved. The music playing. So as I said, guys, if you are looking to inquire with our partners NestHub Investment, then please do email me on the pinned email. You can see it in the chat. It is pinned. Take that down, send me a little email, any information you need, and I will pass you over to a colleague of mine, and of course be able to answer any questions you have, anything you want to know, literally anything. And if you just want a copy of the brochure or anything like that, then you of course can just request it. And I will generally reply to the emails in the evening once I'm home, so please be aware that I will get back to you. Okay, GJ is sitting. Let's just go back to the blank one here. Not actually blank. So targets and entry. But like I said before, it gives you something along the lines of this. We don't know how big the stop will be, but it gives you something along the lines of this. And then you have the possibility to go here, or here, or here, or here. What we don't want to have is a massive area, because if we have a smaller area for target, the probability of hitting that one point is a lot less. But if our bias is bullish, probability of going here is pretty high. Probability of going here is just as high. It's only when you get into the higher points that the probability of going from here to here becomes less. Okay, look at GU here. Entries, targets. Some alerts on this. Gold tanking, still staying within the parameters currently though. That's 100. Ran from the entry points, but no targets hit yet. I think I even have that marked. Oil coming down. Let's mark this up. Okay, so about 10 minutes time, we're probably going to wrap this up. Excuse me. And we're going to head over to the Discord. Then tomorrow, we'll be doing either a super late stream or a super early stream, because we're going to be recording and producing the last episode of the Keep It Simple series. We got delayed a little bit last week on putting out the last episode, so that will be coming tomorrow. Remember, if you're not already a member, the Discord link is down below. But let's just go to a completely random pair here quickly. Let's just go to like NZD CAD, the most random pair ever. Delete all of that. Condense it down. Go back. Play. Cool. So we go to the daily. You can see that we are bias bullish here, and we'd be looking for bullish entries from the 4 hour to the hourly. Here we don't really have any target highs because the target highs are going to be, well, they've actually been taken out already. I mean, that could be a potential area. Oh, I can't go down to the 50-minute. That kind of sucks. Okay, well, we expect price action to take the high. High's taken. Price action still saying the same. Hourly. So an easy way, okay, without even having a point of interest, so let's say a liquid low or an order block, okay, without even having that, you can just look at the gaps, and if you see a counter your higher time frame trend gap occurring, the point you see that inline gap occur, probability tells you you will trade off of that in the direction of your higher time frame bias. So if we use that, using the daily as our bias and then the hourly as our entry, so just 2 time frames, and see how well that fares. So bearish, so we'll look for that hourly gap to occur on the other side. Let's make sure that we're still bullish here. Bearish, bearish, bearish. Bearish. Bullish. So probability tells us you will see price action move bullish from here and take the high. Obviously you'd have partial targets first. Almost too perfect. Tapped straight in, went straight high. And then we've, of course, had a Sunday to Monday open gap. So you can't really count the open gap. But that literally tapped straight into it and ran straight to the high. So that's literally perfect. And notice how all I did there was went to the daily and then the hourly. That's it. Didn't do any other markups. I've got like 3 lines on this whole thing. 5 drawings on this whole thing. So the same principle occurs. Let's just play again. And it still stayed in that area from a Sunday gap open and hit the highest target we had. Clean. Go back to the hourly. We're still bullish on this. Bearish, bearish, bearish. Delete that. This doesn't hold relevance for us now. Daily, what we're saying, still the same. Okay, so there's a gap here. So probability again tells us that running bullish from here is likely. The only problem we have with this one is that it's a very broad area. So having only this as your target is not going to be great, because what you want to be able to do is partial through an area if you only get a partial move and then a drop, right? So we'll just look at this anyway and see what it does. Could just drop. It could be completely wrong. Or it runs bullish to the high, the only target we have in place. So notice how that's 2 instances at a completely random point. Where are we? We're back in 2022. So we've come to a completely random point in 2022, November, almost the 1st of December, and we've been correct twice simply by following daily gap, hourly gap. That's it. Not following anything else. It's as simple as that. It doesn't need to be any more complicated than that. So just maintain the same thing. We'll do this for a... Let's do the rest of December, shall we? Okay, so bullish gap again. Probability is that we will run the high now. I would say that that is triggered, right? It's so close. I'm going to say that even if you didn't take that as a TP at that point, you would have been partial, surely. Anyway, still, same thing. On to the next. Cool. Same principle. That's a huge zone. We'll run bullish from here and take out the target highs. Beautiful. And this is a completely random point on a completely random pair in 2022. Not last month, not last week. This is a completely random point from 2 years ago. And all we're doing is going daily time frame, bullish, hourly time frame, wait for that change from bearish to bullish. Bearish, bullish. Probability tells us we will run higher to any targets we have. It doesn't really don't really count, does it? But we should see bullish from here. Cool. I'm happy with that. Still bullish, still bullish. That's insane. Big bullish moves. Okay, wait for the same thing. Still bullish. Still bullish. Still bullish. Still bullish. That's how we literally doing this with 2 time frames and a couple of lines. From here, we should run bullish. We run bullish. We don't tap back in necessarily, but we run bullish. Okay, same principle here. Cool, let's get that out of the way. Right, same thing here. Run bullish from here, and we should be able to start targeting this and this. Yeah, I could just 2 targets there. Ah, it's too easy. Come on. Too easy. And there was even a scenario within here where we have that bearish gap and then we have the bullish gap open up. So this is another point you should run bullish from. Now, yes, you could sit there and say, well, we've not been tapped into any of these positions. But the idea is you would use a 3rd confirmation time frame. You wouldn't simply go daily, hourly, we must be going this way. That's just a very rudimentary way of doing it. Okay, so same thing again. So how many times is that we've been correct now? 1, 2, 3, 4, 5, 6, 7. 7 times at some random point on a random pair. That's not valid. Even though it's still correct, it's not valid. Right now we can start looking. Let's just double check on the daily here. Yeah, good. And again, you guys saw me go to this random point in price. Unless I've got like photographic memory of the hourly time frame, there's no way I could pre-predict price action from the 7th of December 22. There's no way. Gap, cool. So from here, we should run this target high. Now, it's unfortunate because this is kind of expanded already. But we should see something like that. Alright, up to the high. Come on. Ah, look, first time of being wrong. The first time we were wrong. That's great. Same bias remains as long as the daily hasn't changed. Yeah. Okay, and remember, we're using the same principle, but with no point of interest or point of relevance. So we're not using liquid lows as relevance. We're not using POIs as relevance. We're not using order blocks as relevance. We're not using FEGs as relevance. We're literally waiting for a directional change in order flow and then just trading straight off the back of it, like now. Here. Targets. See if we can get to those targets. Thank you. Oh my gosh. Straight off the back. That's too clean. You know, too clean. You literally cannot predict price action moves like that in a simpler way. There is no simpler way of doing it. No way at all. So I'm just going to do the next sort of 15 days or so, and then we'll go back to our charts if there's anything that's actually happening. It's just too clean, too easy. Okay, so this would be a valid area to look at, but the principle is we need targets above. We don't want to just run straight into, we're going to go higher from here, because where are we going higher to? Yeah, we want highs to be put in to be able to target those points as price moves. Just like we did from here, price went straight through, took us a loss. From here, it tapped in perfectly, ran to the highs. All of the rest of the points I've shown you, I believe this is like 0.12. So 1 point loss, 11 points correct. We've got to keep the same bias. We don't want to get too carried away with ourselves here. Okay, so we want to establish a high, like so. Bearish gap. Awesome. Let's wait for that bullish gap to appear, if it even comes. Bearish again. Bearish again. Okay. It hit the high before we even had a chance to trade it. But the same thing occurs. We're looking for the daily time frame. What is it telling us? Well, it's still bullish. Keep trying to buy it up then. Don't mess around doing anything else. Right, great. This is perfect. Okay, wait for the gap to form. Bearish. Bearish. Oof, this is a tight one. It's a tight one. We should go bullish from here. And we should be able to target here and here. Or you would have taken a loss on that. 100% you would have taken a loss on that. But look at the way, like I said before, I'm using only one principle on the hourly time frame at a complete random point on the most random pair ever. Using the daily time frame as my bias, the hourly as my confirmation and entry time frame. And you literally tapped into that area and blasted through the only two high targets we had. Let's go again. Okay, cool. New target high. We do have a fundamental range now, but we're not even bringing that into consideration. Okay, so until we make an institutional space up, we're just going to let it do its thing. Okay, nothing. Nothing. Double check with the daily time frame here. Okay, now there's potential for the daily time frame to change. So if it does, then we will of course follow that. So let's just play some more here. Where's the 12 o'clock change? So it's like here. Okay, this looks like it's opening up a gap for us. Cool. So from this point, we can start targeting points of relevance. So this high, these highs, that's about it for us. Honestly, could it be any easier? Let me ask you that question. Could it be any easier? I don't think so. Let's go to the next high. Let's play it, see if it gets there. There's your market close at gap. Actually, we need to check on the daily, make sure we're still open on the down. Cool, we closed all gaps. Bias still the same. Okay, so we're pushing down. That's fine. Wait for a new gap to open up if it wants to open up. Yes, there is a space. First target would be here. Second target would be the high that was taken out here, and then last target would be this high. At this stage, we have sustained an upwards movement for a relatively long time, so there is a chance that we could sell off. But we're just going to keep doing the same thing. Right, there's the sell-off. That's fine. So that is now how many times incorrect in directional bias? Twice over the space of what, 16 scenarios, 17 scenarios on the most random pair ever. Honestly, the most rare. I don't even think you'd be able to trade this pair because the spread would be so high. NZ to CAD. Okay, so let's double check here on the daily. Okay, so there is potential again for this space to open up. Let's look. We're only going to do to the end of December. Remember, December is notoriously bad for trading anyway. Looks like we could be opening up that space. Where's the Tuesday there? Okay, so no bullish gaps open yet. Okay, there is a gap here. Let's check back in on the daily. Tricky one. The reason I say that is because this is 7, 8 o'clock at night. We'll mark this area anyway. Targets would be here. Last is straight through. Like I was saying, this is a market close gap now with that move down. Again, that's only what, once, twice, 3, 4 times wrong out of almost 20 scenarios. Can you do this on a lower time frame? Can I do it, or is it possible? It's possible in any time frame. So we're bearish now. So just wait for price action to pull up. Give us a bullish move. Bullish. Bullish again. Does it work on top? Yes. Yeah. It does, but your bias is going to change a lot more consistently. Should be selling from here into lows, but at the moment we only have that, so pretty hits the target, but we don't get to the area we want to sell from. So we're still bearish right now, so we just tapped into there, but the targets have changed, so I wouldn't take that sell even if it gets down through these lows, which it does. Okay, great. I wouldn't be taking that. And you can see in here, we go sell, we go up, we go down. There's so much chop in there. I'd just be waiting for the next clean move to come. So I want to see an upwards move. Like so. And notice as well the way that we changed our bias on a higher time frame instantaneously. We didn't spend any time looking and calculating point A, point B, A, B, C, D, E, F, G. We saw it, we said bias, we sell it. Simple as that. There is no fucking around. And the same thing, look. Dude. You know what? I'm going to cancel this off. I think you guys have seen, I've made my point. That's using 2 points of reference, using one element within price, applying the principle to the most random place ever. I recommend you guys, honestly, testing the theory, back testing it, just analyzing the market, show your work in the Discord, join the community and share your thoughts and ideas, because I can guarantee you will drastically see a difference if you aren't already applying a system that consistently delivers you a bias. I can almost 100% guarantee you will see an improvement. And for you, Andre, we'll look at, let's go to Euro. Let's go to a blank chart, actually. Euro. Actually, what pair do you want me to do? And we'll do it on a lower time frame, and we'll do the same thing. We'll just do like a couple of days. A couple of days price action. And I'll use the 15-minute as my bias, and then the 5-minute as the entry. Or the 30-minute and the 5-minute, something like that. You tell me a pair and we'll do it. I can't guarantee it will work, but I'll show you. Oil or gold? Okay, we'll go with oil. You like oil, and oil is a sketchy. We'll go think markets crude. 0 drawings. Cool. So condensing it right down. I do not know what that price action's doing. We can all agree there, right? So I'm just going to go to a random point. Like here. We'll go whoop, whoop, whoop. How many times oh, I might have gone back too far. Hopefully I haven't. Okay, so we'll do 30-minute as our bias and then 5-minute as the entry. So straight off the bat, we're coming in here with a bearish bias. Oh, it works. It works. This is the patchiest chart I've seen in my life. So we want to see a bullish gap. This is some choppy ass. Right, so we've got a bullish gap. Short-term target. Okay, wait for a bearish gap to appear. This is the choppiest chart ever. Okay, we got a gap here, but the target was hit before we got there. If we go 30-minute, I just want to see. Wait, was I using 30-minute? Yeah, I was using 30-minute. 30-minute and 5. Okay, yeah, cool. Alright, that's fine. Is there a less choppy chart? You know what, fuck it. Let's just use it. Bullish gap, so if we make a bearish space. Bullish. What is this price action right now? 3 AM on a Thursday afternoon. That's what it is. I swear that there should be more gaps here. Let me see. 1 second. Let me see. Okay, it's equally as bad. Let's do gold instead then, because the chart looks absolutely fucking terrible. Let's do gold instead. So that FXCM Pepperstone. Let's go Pepperstone. Is it clean enough? Okay, that's clean. That's clean enough. I can deal with that. Okay, so let's just clear any drawings. 10 drawings. Cool. Let's go to the 30-minute. Miniaturize this ish. Let's go. Again to a completely random point. Just go like here. Open it up. Bias bullish. Cool. Here and here are our targets. 5-minute. Cool. Why is there no gap there? Okay, we got there in the end. Cool. So from here, I mean, it should be slightly lower actually, sorry. From here, we should start seeing target highs being hit. As long as the 30-minute is still, yeah, still the same, we can start targeting highs from that move. Okay, that went straight through the low. So first one did not work. Bias remains the same. So slow. Yeah, bias remains the same. Bearish gap, bullish gap. Obviously, it's not ideal to stack orders, but we'd expect price to go bullish from here. First target high has already been hit. Then we go here, here, and here. So that one doesn't work either. Fine, what's the time here? 8:30. Remember, like I say, there's no guarantee that it will work on a lower time frame. Also, 30 and 5 aren't really not great. But neither are daily and hourly, and it worked well on those. So is this the same? Yes, it is. What time? Okay, so we're getting close to the end of the day here, but the same bias applies. Oh, actually, what am I saying? I'm saying it wouldn't work, but your stop would be below the structure. So you would have taken a loss on the first one here, but your stop will be down here below the structure. So you would technically still be in this. In drawdown, well, in drawdown / BE. I just read it off because it didn't react immediately. Okay, that one worked perfectly. So we'd start looking at this as a target, this as a target, and expect it to run through the highs. So in that case, only ran partially, took out some short-term highs. You'd still be in this. You'd be break even on this more than likely. But this is the target high. Secondary target high, third target high. Also, if you were trading it on a principle that every time the same scenario comes, you would have had an entry here with your stop under here. You would have had an entry here with your stop under here, and then you wouldn't have another entry from there. So we'll just wait for this. See what it does. Okay, so it tags that low and then blasts through. So that's a nice fundamental move at 2:30 a.m. on the 28th of May. This is something that you have to keep in mind when it comes to these kind of backtesting scenarios. We don't know if there's a red folder news at 2:30 a.m. Wednesday morning. And there's another thing as well that a lot of people forget. When it comes to actually being able to backtest, it's fine backtesting everything. But let's say you get on the charts at 9, so you get on the charts here, and you get off at 2. You're only trading that much price action. So same thing applies. Take that and put it to 9 till 2. You're not actually trading until like over here. So it may look good, you know, let's say we got a 1 to 10 here, 1 to 10 here, 1 to 10 here. But you're really never going to be able to capitalize on those. So it's going to come back as false data. So backtesting, unless you're using a 24-hour algo like our partners NESAB, then you are never going to be able to capitalize on all of those moves. Let's go back to the 30-minute here. 30-minute bias has changed, so we're now bearish. Excuse me. Now bearish on this. Okay, so we took the highs here. Okay. No bearish caps are forming. It's only bullish gaps right now. Wouldn't be surprised if our bias has changed. Yeah, it changed immediately after that push higher, so back bullish again. We should have been bullish from here, but we didn't have any bearish to bullish movements anyway, so it's not really anything that's going to change the outcome of any particular move. No bearish moves, only bullish, still only bullish. So ideally, the best thing to do would be, if you're testing on this principle, have 2 charts open, one on the 30-minute, one on the 5, and simultaneously have them playing back. Like this. So now when we see a bullish space, we can start to look to go long. When we get a bullish space, I say, as it blasts off into The depths of hell. My gosh. Okay. And the bias would have definitely changed. So you can see why I don't use like 30-minute, because it changes so much through the space of a day. Whereas on like the daily, I can almost guarantee if we go back to, where did we start from? We started from here, right? Guarantee you go to the daily, there'll be a space and it'll most likely be respecting that. Yeah, look. Bearish. So our whole way down here, we would have been bearish. When the true move comes in, like it did here, it runs bearish, right? When we play it 10 times. What way does it predominantly move in? Bearish, 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 bearish. And let's do the same thing and go back to also just the results on using 30-minute to 5-minute on gold doesn't reflect anything else, because like I showed you earlier, we used New Zealand dollar to CAD, which is like such a weird setup, on the daily and the hourly, and it worked like a dream. So it doesn't reflect the actual outcome. You may find 15 and 5 just aren't that great on gold, for example. Gold's better at liquidating highs and lows. But from here, let's just go to the hourly. So where were we? Here is where we started. Let's go to the hourly. Our bearish is down on the daily. Bearish gap. Okay, so like I showed you guys earlier, we go bearish from this and we look to sell it off. Price doesn't tap in, but it goes bearish. And this is the same principle that I was showing you earlier. Look at this again. Bullish, bearish. Same as this. Bullish, bearish. In that case there, we went bullish, we had bearish. So we had how many work? 1, 2, 3 work, then 1 fail. And the bearish bias is still in place, right? Potential for it to change. So higher time frames are going to work better, because lower time frames, orders are going to shift a lot quicker. So it's going to be harder to keep track of your entry. You're also going to see a crossover. So what I mean by this is there's going to be scenarios that say your trading time frame is telling you to go down, but your actual bias is changing from down to up, and the period between the change, so the time frame between changeover, you're not going to be able to take any change. What's the rules? The rules. What rules? The trading rules? Back over to. Ooh. Why is this shit not loading? What's going on with my chart? Oh, it's on replay. I was so confused right then. Yeah, so on the bearish, we look for a bullish gap first, then bearish, and vice versa. Yeah, so if your bias is down on a higher time frame, let's say the 4H, and then you're waiting for price action on like the 30-minute or like the 15 or something like that, you want to see bullish gaps. So it tells you that orders are being accumulated. Then you want to see price break down and give you a bearish gap. It tells you those orders are being either sold off or bought, depending on what your bias is in the higher time frame. Right, guys, I said about 40 minutes ago that we were going to wrap this up. So I am actually going to wrap it up right now. It's been an absolute pleasure. Thank you to everyone that's joined, everyone that has emailed me inquiring about the investment partners, NSAB investment. Thank you for all the likes, all the comments, for everyone that's been in the chat communicating. I appreciate everyone. If you want to continue this live stream with me, you can head over to the link down below in Discord, join that, and you'll be able to join our call, which will be in the Discord. So if you want to do that, you can. So it's been a pleasure, as always, guys, and I'll catch you all tomorrow in our live stream. Peace and love. Enjoy the rest of your day, and I hope that you have all taken some value from today. Remember, if you haven't already, hit that like button, hit the subscribe button, and I'll catch you all in the next one.